Anything in that whole oil basket that you would look at? Because potentially if you're going to have American companies come in and start pumping out Venezuelan oil, you're going to see a huge sea change in crude prices. Maybe it'll take a year, but that's the direction in which it's going.
Yeah, so Reliance is one of our top holdings and we'll continue to hold it because this in fact adds to the, because Venezuela oil, they'll get at a cheaper rate, which earlier they were getting, but now after the sanctions, they were not getting. Sure. So that will offset the, whatever they used to buy from Russia, which is right now not coming. So it will improve their profits. As you said, it will take some time. But it is only good for refiners, I would say.
There's this interesting note, right, that Jefferies also put out on the Venezuela impact, by the way. So wherein they are saying that the lifting of the US sanctions will allow Reliance to buy advantage Venezuelan crude, and ONGC might receive $500 million of unpaid dividends.
Yeah. Because they had invested over there, right? And
through OEL, which is the subsidiary. But yeah, so both those main upstream guys possibly stand to benefit.
Yeah, certainly.
Now the question is, all of this global development, what's the India impact? What's the stock-specific impact? What does it mean for India's crude supplies? Samit Sarkar joining in for more. Good morning, Samit.
Good morning. If you look at the crude prices, that not much of a reaction is what is expected because Venezuela accounts for just 1% of the world oil production. So even if that oil does not come into the market, in the short term, there won't be much of an impact coming in from this because overall the oil market, if you look at, has been driven by oversupply and hence there won't be much of an impact in the near term. But over the longer time period, if the US oil and gas companies focus and rebuild their energy infrastructure, then the oil prices could be capped given the fact that Venezuela crude output could jump sharply. And do remember that Venezuela has the world's largest oil reserve at around 302 billion barrels of oil reserves. Around 18 to 20% of the global reserve is something that is there with Venezuela. But of late, if you look at the production number, it has been quite weak. The recent numbers are close to 0.9 million barrels per day, which is much lower compared to what we had seen earlier, 2.5 million barrels in 2010 and around 3.5 million barrels back in 1970. Currently, it has been ranging around 0.5 to 1 million barrels, and this this fall in output is largely because of lack of investments, mismanagement, and the US sanctions that had come in of late. But what would be the impact on the Indian companies? Among Indian oil refiners, that is Reliance Industries, IOCL, BPCL, HPCL, Reliance Industries stands to benefit the most given the fact that their refineries are equipped to process the heavy sour Venezuela crude. And even in past, Reliance Industries had a contract with Venezuela company to get in the crude, and this crude has always been profitable for Reliance Industries. So even if there is some development going forward, then that could be positive for Reliance Industries. Now when it comes to PSU oil refiners like IOCL, BPCL and HPCL, limited benefits because they do not import a lot of Venezuela crude because their refineries are not equipped. The old refineries are not equipped, but the new ones are equipped. But benefits would be limited. But this will overall allow India to substitute the discounted Russian crude with Venezuela crude. Another company that stands to benefit is ONGC because they have around $1 billion of pending dues coming in from Venezuela. This is inclusive of the dividend that was expected to come in from their investment. However, that did not come through. So if production increases going forward, then that could come in for ONGC. And ONGC also has around 40% stake in one of the oil fields of Venezuela. And lastly, Jindal Drilling, that company could also stand to benefit because offshore rig rates could increase over the next 4 to 5 years going forward. And this is largely because the demand for offshore rigs will increase because US could focus on increasing production from Venezuela fields, and that could lead to higher offshore rigs, and that could benefit Jindal Drilling coming in.
Got it.